Good evening, ladies and gentlemen. Today is the 23rd of March, Monday, and once again, interesting day. We started off more or less flat from where we closed on Friday, and then we had a downtrending day for most of the day with Bank Nifty looking quite weak and the entire market moving as one. Towards the end of the day, we had a massive short covering move, which basically pulled us back to where we opened, and we more or less closed right there. Being a Monday, it's not one of those days for non-directional strategies wherein you can capture some kind of decay, and the last minute up move could have also caught a lot of people off guard. That being said, we managed to return a little more than 1% of our capital today, and I hope you have some good takeaway from today's video. I think more or less one thing to keep in mind in the current markets that we are is to lock in profits or take certain actions and steps that will help you lock in whatever you have captured at different points of time, because the last 1 hour, half an hour volatility lately has been through the roof. That being said, I hope you have a good time watching this and have a great evening. Also, we have started a new segment which will be all about data analysis. So Ravi will be posting between 9 to 10 every day, wherein we go over what is the open interest, what is the change in open interest, how are different institutions positioning themselves. I think that will be very, very valuable for somebody who's trying to learn how to analyze the market as well as get a good understanding of sentiment. So please check that out. Have a great evening. Thank you for watching.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. We've just entered our position for the day. We have sold the 14200 put and the 1550 call. This gives us almost close to about 67 points of premium, and right now the idea is that we will take advantage of the fact that premiums are still quite high and that the put side is still quite expensive because we are dipping at the open and Bank Nifty is looking very, very weak. So because of that, the premiums are quite good on the put side, and we've taken in slightly more credit from the put side than we have from the call side. The idea for today will be to wait and then see if we start testing towards 14600. If we test and break 14600, start heading to 14500, we will move down our calls. And that being the case, we are working with yesterday's low being as the sacrosanct stop loss. Friday's low being the sacrosanct stop loss, and beyond that probably moving down our puts and risking off on the put side as well. We have a good amount of protection for now on the put side, close to about 450 points. But given the nature of markets lately, 300-400 point move is not out of question. The idea for today once again will be to keep the range large and just take advantage of inflated option premiums. Okay, so there seems to be some strength from the day's low. So we made a low around 14650, and from there a good amount of strength. So what we've done is we moved our puts closer, which are still 430 points away, but since our calls are only about 300 points away, we had to take an additional put side credit. So if we continue to move up from here, we will continue to move up our puts until about 14500, at which point we will no longer move the puts up further, and instead we will just move away the calls. So that will be the idea for now. Some kind of strength from the dips and IT as well. Now breaking out from the range that was consolidating in. It's sort of an up move here. Let's take a look at some of the indices. So yeah, pharma looking quite good this morning, FMCG as well. So that's the idea for now anyway, to balance by taking in more put side credit till we reach about 14500. We will not be moving the calls till then, so we'll keep you posted. Okay, so we continue to see an up move, and a lot of this is Bank Nifty recovering from its lows. So a big dip, and that dip on Bank Nifty has been bought back. So what we've done is we've moved part of our puts to 14400, which is now 350 points out of the money, and left about 3/5 our position at 14300. The calls obviously have expanded quite a bit. All of our calls continue to remain 300 points away at 1550. The idea will be to retain this sort of position until we see a convincing break towards 14800, in which case we will move up the remainder of the puts to 14400. And if we start to head back down and start testing towards 14,700 again, then we will roll back the 2/3 of the puts which are at 14,400, roll them back down to 14,300. So that is the plan of action for now. And yeah, looks like premiums continue to remain good. So that means we should be able to capture some of the in-between action over the course of the day. Okay, so just taking a look at what is happening with the open interest at this point of time. Obviously, a lot of positions now being built up around 14,700, and there are calls being written in the money all the way till 14,500 and puts being written in the money all the way till 15,000. So broadly 14,500 to 15,000, no brainer, that's the range. But we can expect a good amount of volatility in that range. In the up move, we noticed that there was heavy call selling taking place at 15,000 and even lower levels because there is still a very good amount of premium available. So if we currently see in the 750 point strangle, we have close to 77 points available, and the 650 point strangle, there is close to 90 points, 90 plus at this point of time. So very good premiums available, and that's why we can expect super high amount of volatility. Currently our range and trade plan is holding good. What we're going to do is, if we start touching 14,700 and holding below that 14,400 puts, we will move back to 14,300, and that once again will give us a well-balanced trade. So yeah, this is the idea at this point of time. Most of the volatility is coming from Bank Nifty. We saw a dip and then we saw it getting bought back. IT looked like some sort of breakout was going to happen, but wasn't on the cards. Reliance now once again dipping, and at the day's low now trading below 2050. Okay, so for a while we held an imbalanced trade where we had taken additional put side credit, but then we closed the 14,400 put and now moved it down to 14,300. We moved all the puts down to 14,300. We have taken in additional put side credit still, and the reason for that is, in an up move these calls will expand very, very fast. A down move, relatively these puts will take a while to expand. So that being the case, the entire position is now back to being a 750 point strangle, and we will try not to do too many adjustments to this. The idea will be to hold on despite a 50 move or so. Only if we start testing towards 14,600, we break down below 14,650 and start testing towards 14,600, then we will make a change, and that will probably move down our calls or something like that. Okay, the time is 10:48, and what I've done now is move the 1550 calls down to 15,000. So it seems to be no sign of strength from anywhere at this point of time, and weakness across the board. So of course our puts are now just about 370 points away, and yeah, calls are about 330 points away. So once again we are more or less balanced, even though the premiums will tell you otherwise. What we have now done at this point we're still even for the day. What we've done is set stop loss market on the put side at 63 in case there's a sudden and rapid expansion, which we are not expecting, which is why we are holding on to these puts. And if it looks like we're starting to head towards 14,600 and potentially break lower than that, we'll square off these puts and move them lower back to the 14,200, which at that point of time should be trading higher than 40. And to an extent, these calls will protect us in that down move. What we're really afraid of more than anything else, more than the downside, is these calls expanding to 50, which is very possible if we see a 60-70 point up move, which comes in very rapidly, because the more shorts that are built up, the faster that they'll get covered. So as always, in a market that's trending down, it's riskier to sell the other side or sell with the trend, because in case the trend breaks and there's a reversal, you will see a complete reversal in pricing as well. So yeah, being a Monday, we can't really expect too much decay. If we get something like 10 points, that would be the best case outcome. Meanwhile, we continue to see this downtake where Reliance continues to head down, now below 2040. Bank Nifty as well might head down all the way till 33,500 if this selling continues. But we're in a market where at the turn of an hour we can see the entire texture change. And regardless, we're isolated against all of that, and our position is quite comfortable. So we're not going to be worrying too much about that. Okay, the time is 12 o'clock, and as of now, what's happening is premiums continue to remain inflated because there clearly is some kind of fear, but a lot of writing of the 15,000 call, and yeah, heavy amount of shots being built up there. So 14,500, 15,000 has started to emerge as this 500 point boundary that we might be looking at for this expiry. That being the case, there might be some news that might make a big move in Reliance today. The High Court case of future retail is being heard, so you'll have to be on the watch out for that. Bank Nifty is very oversold, and there are a lot of positions built up on Bank Nifty around 34,000. So an up move and then further short covering from 34,000 is what would be the fear on Bank Nifty right now. So in case there is a downside, I don't think we head too much below 33,500 today anyway. So that being the case, once again, we continue to remain cautious on the upside, and we have all our positions with stop losses. We have not made any changes to this in the past 1 hour. It's exactly the same. And as premiums continue to be inflated, we will continue to hold this position to capture some of that as it degrades. Yeah, for now, very sideways. Nothing of interest from the open interest except for the fact that now that spot is at 14,700, everyone's building positions around 14,700, and a lot of 15,000 and 14,500 writing. So we'll keep you posted. Not expecting much from IT as long as the dollar, the fear of the dollar going up remains. Looks like IT will continue to be range bound. Okay, we're seeing some kind of a sell-off situation now. We've broken the day's low, and Bank Nifty is mainly contributing to this, but the broader market as well participating. The idea will be, I mean, for now, the way, I mean, considering the move, these puts aren't really expanded. These calls came down quite a bit. So the idea will be if this continues to expand and we start testing 14,600 and we test 14,600, then we will move away with half the puts. And then if we break down below 14,600, we'll move away with the rest of the puts. And at that point, also consider rolling down our calls. So until then, we will not be taking any kind of preemptive action to correct for this. Yeah, that's the plan. Okay, so the dip continued to go, and after breaking the day's low, didn't want to bother with taking too much of a risk on the downside. So squared off the 14,300 puts and moved them all down to the 14,200. Will not be moving down the calls because the pricing on the calls is just really bad. So that's not on the cards. Meanwhile, have set, once again, these stop losses are for a big 50-100 point candle on 5-minute time frame, which might get us stuck in a position. So that's why these are here. Anyhow, we continue to now stay below 14,650, and Bank Nifty is looking quite weak. And yeah, might see dips, but these dips are probably being used to write more puts at lower levels because the pricing is really, really good. But regardless, we don't want to take too much risk on the put side, and we don't want to roll down our calls to take additional risk on the call side, which is why we have rolled away our puts. Now our strangle is back to being an 800 point strangle, and still has about 66 points in it. Time is 1 o'clock, seeing deep red candles on Bank Nifty, and now we are testing again Friday's lows after the opening, before the whole short covering thing got triggered. We're now below 33,500, and this should attract some demand, but at the same time, a lot of longs created could also start getting unwound. So regardless, Reliance is holding more or less stable, and IT is holding more or less stable. So it's just the Bank Nifty that's acting as a drag. Currently, our straddle in terms of actual points is perfectly centered. 400 points from the put side and 400 points from the call side. What will happen now, if there's a big slide, then there will be an IV expansion that will really expand these puts, in which case we will probably start getting out of the put side and looking at pricing at 14,000 put and 14,100 put and see if there's any attractive pricing to enter. So for now, that remains the plan. Since our range is so wide, we don't particularly have to be concerned about Bank Nifty sliding at this point of time. If everything was sliding, then it would be of a bigger concern. But yeah, Bank Nifty continues to slide, and this should be support here from where we picked off. There is this stop loss candle being formed, these green candles. And what we're doing is we are using this opportunity to risk manage the put side a little more and take in a little additional call side credit. Make it slightly more attractive. Yeah, so we will do that with 2/3 of our position. Because seems to be that whenever there is live, this is a sell on rise kind of a market. But at the same time, since our puts are already having good amount of value, what we have done is we have squared off 2/3 the calls which are at 15,000 and moved them lower to 34. Now again, if we start breaking on the upside and we start heading towards 14,700, these calls which have been moved down to protect these puts will be moved back up to 15,000. So it gives us, it's kind of like locking in a little bit on the call side. And so far market seems to be range bound, with Bank Nifty mainly breaking down and stability coming from IT and Reliance. And all the other sectors, I mean, pharma is looking very good today, FMCG is looking good. It's just auto is underperforming, energy, Reliance is underperforming, but not cascading down, and financial services mainly. So Bank Nifty and financial services. So that being the case, we'll continue to hold this position. And towards the end, if everyone who's gone long in options, they start cutting, we'll see that these options will decay by more. Okay, so as expected, this was to take out stop losses. Now it's getting sold into. And once again, these puts are starting to inflate and these calls are deflating. Where we're not moving the rest of our 15,000 calls to 14,950, we will, but we need to hold below. We need to either take off 25 points from 15,600 or hold below 15,600 or at 15,600 for 15 minutes, and then we will take it down, because now these calls have been sold, and 14,900, which is a call just 300 points away, is trading at something like 40. Now in case there's a reversal, since there's 40 on the put side, you would think the puts will really balance the calls. Not at all. The puts will crash easily 6-7 points very quickly, and then they'll stop moving and the calls will continue to expand, which is why we are not taking that risk. If there is a big reversal, the calls which have been super oversold at this point of time will really inflate in price. So that being the case, we're not going to see some great expansion in these puts also if we move below 15,600, because to keep in mind, these puts are 400 points away. An expiry that is after today, which is going to be 2 days away. Okay, so now some green candles from the bottom to pull Bank Nifty over 35,000. Sorry, 33,500. And yeah, big up move on IT as well, trading at the day's high. Reliance now as well, starting to head higher. So to balance this, we have moved about 3/5 of our puts higher to 14,300. This will balance our 14,950 calls if it continues to expand. So to a good extent, that should take care of itself. Now, 2/5 our position is a 14,200, 15,000 strangle, and 3/5 of our position is the 14,300, 14,950 strangle. This is exactly what I meant, that in a reversal, the calls will really expand and the puts will stop compensating for it, because it's a very oversold market. At the same time, what will be the plan now? We start testing 14,700, then we move the 14,950 to the 15,000, and if we start testing 14,600 again, we move the 14,300 to the 14,200, or maybe just 50 points lower, depends. At this point of time, this is our position. We haven't done much else, and we'll keep you posted. This could be another elaborate move to take out stop losses, but if it has enough steam, then it could lead to some kind of massive short covering at the same time. So you have to be wary of that happening. And yeah, otherwise for now we're balanced and nothing else to do. Okay, so for now this bounce is kind of holding. Reliance volumes are slowly starting to pick up, and basically 2050 is where it will see selling pressure and might move plus minus 2050. Bank Nifty, a lot of supply coming in when attempting to head strongly above 33,550, and IT continues to trade at the day's highs. So That being the case, the calls did expand quite a bit. But since there is selling pressure, the calls are not really getting covered at this point of time. We have to understand also these calls are quite out of the money and continue to be so. So for now, there's a little bit of fear on the downside and fear on the upside as well, although the fear on the upside is starting to increase, and that kind of keeps the premiums still very high, and which means that people who are taking these long and short positions should start unwinding towards the end of the day. Okay, randomly gave up 50 points in a matter of a few seconds, more or less. So gave up like, yeah, 50 points probably to get out stop losses. I mean, this definitely stopped a lot of people who were short, and then people start going long, saying that, okay, all these guys cover, these guys will cover, and then that will make a new day's high. We might still do that, but then, yeah, they didn't get to hold on because definitely this would have stopped people out. And meanwhile, I mean, we're not too concerned with random 50-point moves. This volatility is what we're expecting in the way market is lately. So our position continues to remain exactly as it is with a slight upward bias, and that's good because it means that obviously when you have a 50-point bid dip, the puts will inflate, but the calls have also deflated. And in case the short covering rally continues, then there is still a good amount of meat on the put side that we're currently sitting on. So that being said, it's 2 o'clock now, and yeah, we're going to continue to hold this position, and the changing criteria remains the same. We need a break over 14,700 to then start risk managing our call side, or a break below 14,600 to start managing our put side. And there's a good amount of premium in the options. Okay, big short covering up move. Just completed making whatever changes are required. Closed all the 14,950 calls, moved them to the 15,000 call. Closed all the 14,200 puts and moved them to 14,300 to get to some kind of a balance now. Basically, IT is now running, and Reliance as well is holding above 2050 and heading higher from there. So you'll have to see where that goes. But Bank Nifty, not particularly too much upside, but 100 points from 33,500. This could lead to some kind of propelled short covering move, and if people who went short here, everyone starts covering, that means a new day's high. So how do we not get screwed over by that? Very simple. The idea will be, if these start expanding to around 41, 42, we will get out of them. We'll just get out of them. At that point, we'll cut the trade. If these have expanded to around 41, 42, these would have come down to at least 30, if not lower. And at that point, we would have effective from here, depending on what happens to the put side options, lost maybe about 2 or 3 points. So, and then we will exit and see if there's some other form of trade to be taken. But until then, no changes to be made. Okay, so we had once again the up move that got sold into. So what we did was squared off about 2/3 these puts and moved them lower to still get pretty decent premium at 14,200 of 28. And yeah, in case we start making an up move again, then the puts will be moved back up. So each time just offing the risk in the direction of the volatility. So we continue to hold this position. 2/3 is here. The rest is here. So okay, didn't have to manage put side risk anymore, so moved them back up to 14,300, and once again we are at more or less a balanced state, and we continue to trail in our stop losses now on both the put side and the call side, because there's little less than an hour left to go, and we don't want any last minute up or down move catching us off guard. Overall, I wouldn't say much DK does happen in general on Monday, but even by that standards, today relatively low. The IV for the option continues to remain quite high, and yeah, and to be fair, we did have a very risk off position. Even now our position is 700 points triangle, so we can't expect too much of a crash in premiums. Okay, it is almost 3 o'clock, and what we've done is we've rolled down calls further down to 14,950. This will be the last position that we are at, and the idea will be, if our mark to market now, if we lose another 1.5 from here, which is basically if we start heading below 1 lakh in mark to market, we will set up exit orders so that we can exit everything. Okay, we're getting into the last 25 minutes and now we are seeing a kind of a down move once again coming from Bank Nifty and IT moving at the same time. Looks like the plan will be that we will close very close to 14,700 itself. What is happening is there's random spiking of fear on either direction, which is leading to quite a bit of volatility in the options pricing. We are seeing on every 5-minute candle each side. So in our case, the 14,300 and 14,950 options are changing in value by upwards of 25-30%. That being said, we're still quite well balanced, so we don't really have to be too concerned. The last moment we'll see a lot of unwinding of the longs, and that's the plan, to not get shaken out very quickly by volatility and try to hold. We anyway have all our exit orders lined up. So MIS, all in MIS. We have them ready to hit the eject button if we want to get out. The idea is if we give up, once again, from here about 1.5 point or so, then we will consider if there is an imbalance in the skew to just get out. Okay, so we continue to see the calls getting covered and the calls are expanding, but the puts are really crashing. So that's what's compensating. The idea will be, once again, we have a mark to market stop loss, and at the first sign of red, these calls should lose a considerable amount of value if there is. If not, we are just going to exit the call side and set a stop loss on the sold put side, which is very, very close, in case we continue to trend upwards. Okay, so 3 minutes to go. We've now obviously moved up our stop loss. The idea will be to hit exit all, because now the premiums are really crashing, and hit exit all if we head back down to 155, 160. So we're gonna move up our stop loss. Last minute shenanigans, but basically the calls which expanded really had to come down in price, and these puts, which now looking at them, are trading at 450 points, so we cannot retain so much value either. Even if there is a dip, they have to lose value. So okay, looks good enough. We're going to start cutting the trade. Hopefully we don't lose too much to slippage. And okay, so we do lose to slippage obviously, and we are net short this option. Start getting out of this. Okay, so we are basically out of all our positions. We are up for a little bit more than 1% on the capital today. Today being a Monday, really wouldn't expect too much decay, and considering the day it was also trending down, complete weakness, and from there, bam, big up move. So yeah, we're just happy we didn't get burnt on the reversal. It's about it for today. If you haven't checked this already, Ravi will be putting out a video later today between 9 to 10, and we're starting this new segment, which is going to be all about how to analyze the data, how to look at FIIDI data, how to look at client data, how to look at options positioning, what to interpret from the option chain. Lot of really, really good and useful stuff. So I urge you to check it out. And thank you so much for watching. Have a great evening.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.